Okay, welcome back to my channel. I've been on for some time. This is Dave Country Institute. I've been on for some time, and then I was thinking of how I can be able to, bring more value to works apart from the education and the platform. So I came up with this that I'll be looking at how I take my own trades, right? So how do I trade? How do I trade in practical terms? What do I see before I take my trades? How do I manage my risk? How do I come out of the trade? How do I enter the trade? Okay, so this all we're doing in practical terms with live account, and you will see the progress of the trade is the progress of the account and how things works from my own end, right? So this time around we're doing pure practicals, no longer theory. Okay, so if you look at this is a live trade, just to make reference. This is a 10,000 euro account size, right? And then I'm taking only a risk of 10% in total, meaning that I'm taking only 0.25% risk of my equity daily. So the highest drawdown means the highest loss you can go in a day. The highest drawdown I will take on this trade a day is $50 of this equity. That is 0.25% of my equity. Meaning that if I get 0.25% of my equity in a day, right? No matter what, if I want to swing or not, I'm going to shut up that trade. That's what I do on this account, right? So just so you know how I manage my risk and how I take my trades. So this video, I don't want to take 5 minutes, so we'll just rush through this particular analysis I made here. So I'll show you exactly what I saw on this trade and how long I think this trade is going to go. You look at this market, you see that we have a very good structure here. If you're very close to me, you know that I'm a fan of M and W's, right? I'm a fan of the dealers psychology, the last way of trading, the dealers way of making the market, which M and W is one of the basic ways dealers makes the market, right? So this is an M formation here, one, right? So if you notice this is an M formation, I'll quickly get that now so we can draw. It's an M formation, am I correct? So this is the first leg, is the second leg of an M. This is a macro M formation, right? So meaning that I expect this market to sell to the neckline. See that now? This is called a neckline, this point here. So I expect this market to sell to the neckline first. That's what I expect to see on this market. So I'm not going to sit around and just let the market run for 2 years or 1 year. So I'm just going to be taking trades in between the market and then enjoying the ride, enjoying the market ride. So this is what I did now. I've seen this now. This is the market structure means that I've gotten direction of this trade in 1 week time frame and also in 1 day time frame. Look at it here. It's the same, right? It's the same. Just the 16. Okay. So we've got a very clear in 1 week time frame. So let's look at how we can be able to scratch in between this trade in the lower time frame. Looking at 4 hours time frame, we'll know that if you're an Elliott wave trader, all right, I'm not an Elliott wave trader, but in the dealer's method of trading, right, market moves in 3 levels. 3 levels can be 3 days rise, 3 days fall. It can be three rise across, time frames. Or like, let me give you an instance now. Market can move this way. Let's see. This is one. This is one, right? This is two, and this is three. Okay, so usually the dealers mix market in threes. So it can be like this. Just like what people call Elliott wave, right? So it can be one, two, and three. Okay. So this is how the dealers move market. Usually, commonly in 3 levels, right? So 3 level rise, 3 level fall. Commonly, that's how the dealers move the market. So now if you look at it critically, you notice that this market has been made trying to get this now, sorry. So this might not be very a lot professional, so you just flow along with me. The mental is to make money, right? Okay, so this is try to clean up this crazy. Right. Okay, yeah. Uh, okay. Okay, so this is what I see in this market. This is 1 hour time frame. So in the making reference to the market moving in 3 levels, you can see the market made one move here, right? Made a second move here, right? So I expect a third move below this low. Why I took my profit is because I'm not going to let this market exceed this week. For me, Euro pounds has not been very volatile this year. Okay, it might be for some, but it's a bit sluggish this year because I followed this pair from January this year to now. So it's a bit sluggish, So I'm gonna take my profit here. I hope to close this market. Today's Wednesday before the end of the week, so that's why I came very close. So and you can see that I'm using a very low risk on this trade. Look at this risk now. I have, I told you, trading, analyzing market is one thing, managing your risk is another, right? Understanding risk frame is another. So usually you have an account size, you determine how much trade, how much percent you want to risk in total. Then you determine what highest drawdown will can you condone. Why you want to get the highest drawdown is because you don't want to give yourself an unlimited hope that market is going to turn your way. So you know that you're going to cut short at this point. I know if I have to enter again, I have to find a better entry to enter, but not in that pair, or maybe another opportunity in that pair, but not that day. Why you're doing that is because you're trying to save your money from, this hope, this unknown hope the traders have that it's going to turn, right? So you just want to cut short on your drawdown. Okay, that's why I did that, right? So we'll have one, we'll have two, and then we'll have the third one, three. So market movement. Remember that we've gotten the direction of the market in total, right? We saw an information in 1 week time frame. In general, we expect this market to move like how many people from the entry? Uh, Plus or minus 1,600 pips, right? From the entry. It could be 1 year, it could be 2 years trade, right? This is a uh long term what's it called? No time position on the street. Okay, so but we expect in the short term we'll have to take something out of it, right? So exactly why we came to the lower time frame. So 15 minutes time frame is showing us the same thing like fast. The only difference that it's not as wide as fast. Look at it now. See that now? So we'll have one, we'll have two, and then we'll have three. So we expect market to go in three levels. From there, cool. So 4 hours. So let me get fast so it can be clearer to us. One, right? Two, and then three. So this third level usually is equivalent to the first leg. So if this first leg was like say a 400 pips, okay, this third level should give us equivalent or 100 equivalent or something very close. The second level is usually very short. Why is this second level always short? Is because the dealers are not very much involved in this move. The traders are carried away with the trend has changed. So there is more of the traders on this leg than there is more of the dealer because these guys are the ones that has the money to move the market. You understand that, right? So we'll have the market move the third level, right? And the third level is usually longer. So we'll expect the market to come as low as this. I stopped here because I don't want to exceed the week. You understand me now, right? Okay, so let's look at the risk that I took on this trade. Very important part of trading, right? Doesn't matter what your risk will be entered. Let's look at the risk of this trade. Remember, I said I'm going to be taking, in addition to what I saw, also, I like to be very plain with this. I saw also this, right? This is called a railroad then track, rail, L-R-A-I-L, road, R-O-A-D, track, T-R-A-C-K, track. Railroad track is a candlestick formation that usually shows reversal, right? Just like you're seeing here. See that now? So once you shade, market will tend to reverse. Okay, so I saw a railroad track on this high being also the takeoff from of the last or the third level fall after this one. Then we'll have the two, then we'll have the three. You see? So you synchronize between 1 day and 4 hours. What I'm saying is a bit foreign to you, please. I would advise you to get the education. It will help you a lot to be able to comprehend what I'm saying faster and help you to make the right decision on your own trades. Just anywhere, just get the link around this YouTube. This the link, get the education for yourself to help you very well. I can show you that. All right, so you see that now. So I expect market to fall to this level. That's exactly what I do. So I did something very simple here. First, I went to 1 week time frame and I got the direction of the market. It could be 1 week, it could be 1 day. Why I went to 1 week? Because 1 day my screen is not showing me as large as 1 week is showing me. So I wanted to get the market a very compressed way. So I wanted to get full market picture. So I went to 1 day, 1 week. If one day give me what I wanted, or the direction I wanted to see, whether it's a W information, I won't bother myself going to 1 week time frame, right? If 1 week doesn't give me, I'll go to 1 month. So either market, either way, I want to get total picture of the market and the dealer are trying to make on the long run, so I can know where to position myself and then take in that direction. Basically, I'm not only in that direction. We can see a buy here opportunity and take in between the market, right? I've told you let's make market in three levels. Can be three level rise, three level fall. Remember that market makes also pull back, even if it's going for itself, right? It doesn't make a pullback. So pullback can take like 2 weeks, 3 weeks, 1 week, 1 month. So you make a pullback. So we can take advantage of the pullback of the market. So we're not going to be only be selling because we saw an M formation. You understand that now, right? Okay, so that's basically what well, this time is already. Okay, so we expect the market to sell to this point, right? So sell to this point, then I take the trade. Now I took up that trade. Let's look at my risk. I said risk. So this is from the entry point to the 40 pips, right? Take profit 60 pips. So I have 1.1.5% risk reward ratio. It's not bad, right? So based on your accuracy on that trade, I think I have very high accuracy on this one, so I don't mind taking such risk. It's good to have highest one, at least 1:1, 1:2, 1:3. Don't have 1:0.5. What I mean is I don't take risk of 1% and one or risk of 20 pips, and you're making like a 40, and you're losing like a 40 pips. You're not doing a good business. I told you trading is business, and then we have to follow the business, ideology behind all those trading. Okay, so it's also to that point and that's it. So if we're right, the market goes our way. Congratulations, we're going to be up few dollars, right? Remember that the essence of trading is not to at risk or do something very funny about your trade. So the higher your risk, okay. So if you want to have a lesser risk reward ratio, you can try to bring down your, you know, if I market makes a move, right, and I bring down my stop loss to this entry here, I'm going to add another position and let the market run. Okay, so exactly how I add position to the trade. So once the market moves and exceeds this level that is giving me now, okay, I'm going to bring down my stop loss here and reduce my risk, add position to this trade, so that can enable me to make more profit out of the trade. Okay, exactly what I do on the trader. Yeah, so that's basically for this one. So we also have other currencies that will show us I've taken the trade already to show us how it works. Okay. All right. Thank you for watching that. Once again, my name is Confidence, and give yourself a good favor. Take the education. All right. Take the free class. Take the paid class. Whatever you think based on your need. Okay. And then find yourself making good progress in trade. Yeah. Thank you once more.